Okay, folks, this is Ed McMahon setting in for Johnny Carson, also known Eddie McMahon as Larry Pesavento, setting in for Tommy today and tomorrow. Hope we'll make it a little bit entertaining. At least we're getting a little action in the market, especially the NASDAQ, which has been, been going straight up. Now we've had a little bit of a correction. Big ABCD in the NASDAQ comes in at the 55-60 level, about 100 points from where we are now or so. Let's take a quick look at the news. I just posted this thing that one of our Den listeners sent to me about Janet Yellen, saying that there's virtually no chance of a market financial panic in our lifetime. I think she was talking about herself, and maybe she's not planning to live through the 5th of October. I don't know, but for her to say something like that, that's just that's almost as bad as some of the tweets we see on Twitter. What is it, Twitter? Oh, Twitter. So I don't know. We'll see how long it lasts. But if you remember, back in October of 2007, I started in December of 2007, I believe, doing the show for TFNN, and on October the 7th, that's when Bernanke came out and said all green lights on the financial market. Everything looked smooth sailing ahead, and it sailed about one day, and then it took a flying Melinda and dropped about 85%. So when you see stuff like that, folks, that's just a professional trader sees that, and he just literally gets frothy at the mouth. And you can see what happened to some of these stocks. Now, the banking stocks held up incredibly well today because of the news that they were going to get a really good deal as far as their rules or whatever they're going to do with Dodd-Frank or Frank-Dodd or Manley-Hall or something like that. I don't know what it was, but it was one of those things. But if we take a look at the banking stock, you'll see it closed near in about the middle of the range. And it stopped at the 78% retracement of the high from last March. It also made a 1.618 expansion from the high that we made in May the 5th. So there's some resistance up there. And with the news as bullish as it was, you would have thought that they were going to, explode it and, get it up to the high ground there quite a bit. If the banks hadn't been up, folks, I think the Dow would probably been down 200 and some points, would be my guess. As it is, it's down 100 and something, but, that's the way it would look like to me. I'm not sure, but because there's so many Dow stocks that are related to banking, you've got the Bank of America, and you've got American Express and J.P. Morgan and Goldman Sachs. I mean, Goldman Sachs is the biggest one because that's the highest price stock in the Dow, and it was up 5 or 6 points at one time. So those are the things that you might want to look at, is check those stocks out. Maybe we'll do that tomorrow when we do the show for Tom, just to keep an eye on, what things are happening over there. Now, what I usually do is I usually go down to the Dow Jones Industrial Average to show, what the market is doing as far as the Bradley model. And if we put this up here, this is pretty much up to date for today. You'll notice that the Bradley model had a top there around the 19th of June. Let's try that, June 19th. And that means that we should have a low coming in right about the end of next week, right about on July 8th. And so that should be something that'd be very interesting to watch. Actually, the 7th is a Friday, so that would be the day you'd be watching for it. Now, if it's down that day, I would wait until Monday because you don't want to buy if the market is sharply lower. Now, if you look at the Dow a little closely, I've marked in here the two swings that met today at the Dow's low. We made a 382 retracement of the low from May 15th, which means this market is still really pretty bullish. And we made a 61% retracement off the small swing from May 28th. So all of that says there's pretty good support at 21,180, 100 points from where we were. We rallied over 100 points from the low today. So that's what's happened, with the Dow. It's the NASDAQ that has been the big, the leader of pack on the downside. So it certainly has a bearish formation in the NASDAQ. even though we could get some really strong rallies in here without too much trouble. One of the things, of course, that's been in the news, and we've been following it very closely on our show that's on from 9 to 10, and we'll see here that if you look at the Treasury bonds versus the Treasury notes, you'll see the collapse in those markets, which means interest rates have spiked and spiked very hard. This started with the German Bund in Germany on Monday, and it has continued. Evidently, there's a consortium of the central banks are getting together to push interest rates higher. That's one of the reasons why the banking stocks were so strong, along with the federal regulations being changed a little bit as far as their stress test, but that allows them to charge, more. They'll be able to get more interest rate as interest rates go higher. So we'll see what happens with the banks, based on that. But basically, I'm just a technical person. I'm not a fundamentalist, and I don't follow the politics and stuff. So it's a little beyond my pay grade. But I still listen to what they're saying, but I'm not sure, what exactly it means. We'll cover gold and silver here after we come up to the first break here. But last night I did a 2-hour webinar about my life as a trader, and there was a couple of questions related to the same thing that I'll cover after we come to the break. And the question related to how did I make so much money so fast in a period between 1972 and 1974. It was about an 18-month period there where I ran 30,000 up to a little over 1.2. But I was able to actually run it from 1.2 down to minus 2,700. And you know what? Even when I did that, I wasn't even upset. I didn't lose a night's sleep. I knew I could make the money back. I mean, it was just, I knew that I had done something stupid. What I had to do was to go and look at all my statements to see what I had done wrong. And the one thing that I did wrong all the way was adding to losing positions. And I'll show you why I did that when we come up to the next break, because I just violated every conceivable trading rule and money management technique that you could possibly do. But, like they say, the smart man learns from his mistake. The wise man learns from the mistakes of others. And I had to learn from myself. So my head was bouncing off the table every time I learned a lesson. So take a break. 877-927-6648. Setting in for Tom O'Brien, it's Larry Pesavento.